And welcome to this week's study session for the Ohio Division of Real Estate Salesperson Exam. My name is Michael Rapaski. I'm the team leader and CEO of Keller Williams Greater Metropolitan. And based on the chat, it looks like we're going to hit some math tonight, as well as a little bit of stuff for the Ohio Real Estate Commission. So we'll start with real estate calculations, and then we'll hit some financing, which covers a little bit of math, and then we should have enough time for that last section on the Ohio Real Estate Commission. Let's go ahead and dive in. As you guys know, I'm going to read the question, read the answers, A, B, C, D. Put a B, C, or D in the chat box. If you are completely lost, put a question mark in the chat box, and I'll use that as an excuse to go ahead and take a little bit of a deeper dive on what we are doing. Question number one. The sale of a property will close on July 7th, 2010. Taxes are $2,950 per year and are paid through the last half of 2009. Calculate the seller's share of the taxes using a calendar year. So would those be A, $1,241.95, B, $1,095.45, C, $1,519.45, or D, $1,459.15. So A, B, C, or D. Which one is correct? So, there's some doing with these problems, so I'll give you a couple minutes to work through it. I do want everyone to try these problems because whether or not you try them here, you're going to have to try them on the exam. So go ahead and work through. If you get stumped, put a question mark in the chat box. About a minute left. All right, let's get some answers in the chat box here, guys. So far, we have an A and a C. All right, 3 C's, an A, and a D. So we'll go with C. And that's going to be correct. So how does that come to be the answer? Well, let's talk about it. Taxes are $2,950 a year. We're told that we're supposed to use a 365-day calendar. So we're going to calculate taxes down to the day based on what the seller owns. So divide by 365. That means daily taxes are a little more than $8.08. So now every day that the seller owned the home up to and including the day of closing needs to be included here. So you're going to multiply that by the number of days that the seller lived in the house. All you do is count the days of the month. 31, 28, 31, 30, 31, 30 gets you through June. That's 181 days. After that, you add the number of days in July, which is 7. So we're going to multiply this by 188 days. That gets us to 15,1945. I'm sure we'll get another one of these, so you'll get a chance at redemption here shortly. Question number 2, a property is valued at $115,000 and taxed at 47 mils. The assessment rate on the property is 42%. Calculate the yearly taxes. Is it A, 2270, B, 227, C, $22.70, or is it D, $4,540.20? So 2 more minutes on the clock for you guys to work through that one. You will have a question about mills on your exam. About 15 more seconds. Get an answer in. All right, majority of folks in the chat put A, and A is going to be correct. So how do we get that? Well, we know the property value is $115,000, but it's assessed at 42% of its value. So the tax assessment is going to be levied against 42%, or multiply 115 by 0.42. Be levied against $48,300. So anytime you see mills, you get to the assessed value and then divide by 1,000, because mills are 1/1000. So that's $48.30. The rate of taxes, or the amount of taxes, is 47 mils. We're just going to multiply that by 47. And that gets you to $2,270.10. All right, same question again. So everybody should be able to do this and get this. So I expect to see a lot of answers in the chat box. The property is valued at $100,000 and taxed at 45 mils. The assessment rate on the property is 35%. So go ahead and calculate the yearly taxes. Is it A, $4,500, B, $15,750, C, $1,575, or D, $2,575? All right, seeing plenty of C's in the chat, so we'll go with that. And that's going to be correct. 100,000 times 0.35 equals 35,000. That's the assessed value. Divide that by 1,000 because we're dealing with mils to get to $35. Now we take 35 times 45, gets us to 1,575. Question number 4, a property is appraised at $150,000 and assessed for tax purposes at 35% of value. Calculate the semi-annual tax bill if the total mils is 80. Is it A, 4,200, B, 42, C, 2,100, or D, 75? Take about a minute to do that. Pretty straightforward one again. All right, get your answers in. We just had 2 of these in a row, so it should be very doable for everyone. Everyone's putting C in the chat, and that's correct. So $150,000 times 0.35 assessment rate gets us to 52,500. Divide that by 1,000 because you're dealing with mils. Means a mil is valued at $52.50. Now we're going to multiply by 80, but because it tells us it's the semi-annual tax rate, semi means 2, we're going to divide by 2. How much would you pay each half of the year? And that's $2,100. A property is sold for $350,000. If the conveyance fee is $2 per thousand, how much is the transfer tax? Is it A, $350, B, $3,500, C, $700, or D, $7,000? Take about a minute. That should be sufficient for this one. All right, seeing all the C's in the chat, we'll go with that. And that is correct. $350,000 house. It's assessed $2 per each thousand. So we're going to divide by 1,000 because we need to know how many thousands are in the chat or in the value. It's 350. So then it's $2 per. So we just multiply by 2. That gets us to 700. Question number 6, a property sale will close on March 31st, 2010. The taxes are $4,360 per year and are paid only through the first half of 2009, which was the prior year. Calculate the seller's share of taxes using a 365-day year. Is it A, 3575, B, 1107, C, 3272, or D, 2750? You're going to be calculating taxes that the seller owes, and they've only paid through June 30th of the prior year. So you're going to go all the way back to the back half of 2009 to figure out the cost of that time in the home. All right, looks like we have a majority of C's in the chat. That's good because C is correct. Let's look at this. First, we're going to get to our daily tax amount, $4,360 divided by 365. That's $11.94 per day. So there are 181 days in the first half of the year. So on a 365-day calendar, it means there's 184 in the back half of the year. So 184 plus 30 plus 28 plus 31 plus 31 plus 28 plus 31 is plus 90. So 184 plus 90 is 274. So from July 1st to March 31st, they owe for 274 days. So we multiply by 274. That gets us to 3272.98. Question number 7. A property is valued at $115,000 and taxed at 40 mils. The assessment rate of the property is 35%. Calculate the yearly taxes. 1 minute remaining. Or I'm going to give you 1 minute on this one since we've done a few of these. Yeah, you guys made pretty quick work of that one. 1610, 1610. So for this one, it's 115,000 times 0.35 because that's the assessment rate, divided by 1,000 because it's mills, times 40 because that's the millage rate, gets you to 1610. The premium for 2-year insurance coverage on a home is $850. Policy was purchased and paid for on July 15th, 2009, and the closing will take place on April 12th, 2010. What credit is due? What credit is due? Use a 365-day calendar. Is it A, 5/33/29, B, 6/19/54, C, 7/94/51, or D, 6/51/49? I'll give you a hint. It's a 2-year policy. So if you're using a 365-day calendar, you're going to take that 850 and divide it by 730. And then the credit due is the credit due to the seller, because the insurance policy is going to stay with the facility. And so that seller is going to be due a credit equal to the days that they would have held the policy on the property that they've paid for, but they've sold it, right? So it's the non-consumed days. We're going to go 1 minute and 30 seconds on calculating that. All right, so let's take a look. Everyone got A. And that is correct. So what we have to do here, and because we have these weird dates in the middle of the month, is you actually have to calculate each month. So 16 days gets you to August 1st, or gets you to the end of July, excuse me, plus 17 days actually, because the 15th counts, plus 31 days in August, plus 17 plus 31 plus 30 days in September, plus 31 in October, plus 30 in November, plus 31 in December, plus 90 for the first quarter, right? 90 days from January 1st to March 31st, plus 12 days in July. So there's 1,272 used days. So now we will say 400 400, that leaves out of 730, 458 days. So 850 for the total package divided by 730 days times 458 total days is 533.29. Remember, you always want to count the days, include the days that the seller was in the house. All right, question number 9. Which expense, when a property owner has a mortgage, is generally not deductible on their taxes? Is it A, the mortgage prepayment penalty, B, the property taxes, C, the mortgage interest, or D, the principal? Which one is generally not deductible? Seeing some A's, some B's, and some D's. This is in my opinion, a poorly worded question. I don't think you'd see anything like this on your exam. But it is important to understand what is and isn't deductible. So the mortgage prepayment penalty is deductible. Mortgage interest is deductible. Property taxes are not deductible, but since this is a question about what is deductible from your taxes, taxes aren't deductible from taxes. That's a wrong answer for a different reason. What is not deductible is what you pay on the mortgage principal. Principal on a mortgage is not tax deductible. Interest on a mortgage is. Prepayment penalties are. The fact that property taxes in there is just, poor show on the question writer's part. Question number 10. A parcel of land is purchased for $234,000. It is later sold for $256,000. What is the percentage of profit on this property? Is it A, 9.5, B, 10.5, C, 10, or D, 9%? The answer is going to be A. The reason for that is we have to first calculate the total profits. That's going to be $256,300 minus what we paid for it. So what you sold it for minus what you paid for it. So there's a profit of $22,300. Then you're going to divide that by the original investment, because that's what we calculate profit off of. That's going to get you to 9.5%. Fairly straightforward. Just got to get the numbers in the right order and divide by the correct ones. All right. Good job, guys. Hopefully that was helpful to clear up a few things related to some of the math. So now we'll do real estate or financing questions, because there's going to be some math in here as well, or has the potential to be. Question number 1, a blanket mortgage involves a single loan with 2 or more parcels of property offered as a security. B, 2 loans combined into 1 interest rate. C, a loan with a balloon payment at the end. Or D, a fully amortized mortgage. A, B, C, or D. All right, seeing some A's, some B's, and some C's. More A's than anything else. And that's good, because that's correct. Blanket mortgages combine 2 or more parcels of land as securities for the loan. Wraparound mortgages are created when 2 separate mortgages are wrapped into 1. A balloon payment is paid at the end of a loan term. It is the entire remaining balance not covered, and sometimes that's referred to as a term loan. And a fully amortized mortgage is what most properties deal with in all mortgages on the 30-year mortgage, which is that the same amounts paid every month and applied to principal and interest. Property is attached in order to A, compute the cost replacement value, B, provide security for payment of a debt or judgment, C, construct zoning boundary lines, or D, compute valuation for mortgage purposes. Why is a loan attached? B's seem to be the predominant answer here, and that's correct. Attachment is court-ordered seizure of property to provide security as payment for debt. Question number 3. How many acres in the lot described as the northwest quarter of the southwest quarter of the southeast quarter? How many acres are in that lot? Is it A, 20, B, 1, C, 10, or D, 2 acres? Remember, if you don't know what to do here, put a question mark in the chat. The correct answer here is going to be C. So anytime you see this lot description as northwest quarters, southwest quarters, etc. Sorry, thought I heard something outside. Anytime you see that lot description, you're going to think about the number 640, because that's the total number of acres in that parcel. And so when they start describing these by quarters, you're just going to divide by the denominator. It could say halves, it could say quarters, it could say eighths. So 640 divided by 4 is 160. Then you divide that by 4 to get to 40, and then you divide that by 4 to get to 10. Right? So the northwest quarter of the southwest quarter of the southeast quarter, divide by 4, divide by 4, divide by 4. Partially amortized note that reduces part of the principal by the time the final payment is due is often called A, a conventional loan, B, a wraparound mortgage, C, balloon payment or a balloon note, or D, a fully amortized loan. So seeing some C's in the chat, that's the correct answer. This balloon payment or balloon note is what's represented in, that there is a large lump sum or a balloon payment due at the end of the term, right? If it was fully amortized, you'd make the same payment every month until the loan was paid off. Keep that in mind. Question number 5, the seizing of property by court order as a security for a debt or judgment is known as A, capitalization, B, alienation, C, attachment, or D, encumbrance. Yeah, this is just the same as our first question in reverse, right? And it's important to know your definitions backwards and forwards. But this is no different than the very first question that we had. Question number 6, the type of lender with the greatest percentage of assets invested in residential mortgages is A, commercial bank, B, a life insurance company, C, a savings and loan, or D, a mutual savings bank. Which one is most likely to have the greatest percentage of assets, invested in residential mortgages? Ooh, everyone knows this one right away. It is the savings and loan. And that is because they're going to be most invested, because the premise is to take deposits from constituents, put them into their accounts, and then make loans with that money. Question number 7, a lump sum payment of principal is due at the end of which type of promissory note? A major, B, a balloon, C, a wraparound, or D, a fully amortized note. Yes, we've had that one already tonight. It is a balloon payment. Question number 8, which type of single mortgage loan exists when 2 or more different parcels of property are offered as security for the loan? Is that A, a wraparound loan, B, a fixed rate loan, C, a variable rate loan, or D, a blanket loan or blanket mortgage? Yes, D is correct here. That is a blanket mortgage. Question number 9, the obligation or promise to be personally liable for conditions in another person's contract is known as A, novation, B, ostensible liability, C, assignment, or D, assumption. Looks like we're pretty confident as either C or D as a group. It looks like I have just a few more D's than C's, so I'm going to say that. And that is correct. The giving of one person's contract rights to another is assignment. The promise to be liable for that person's obligations is assumption. While assignment without release of liability, novation does not release the withdrawing party from liability under a contract. The seller assigns a loan to the buyer, and the buyer assumes the loan. A broker, for example, has what is known as ostensible liability. The broker is always liable for any discrimination by his agents, whether or not the broker knows. Last question for finance. A homeowner receives a duplicate 1099 form from the bank showing how much interest has been paid over the last year and what principal amount is remaining. This document is A, a certificate of title, B, a certificate of sale, C, an estoppel certificate, or D.
Okay, so the homeowner receives a duplicate of.
Please make sure that you're muted. Or is it D, a certificate of habitation? What is this duplicate 1099 form? And C's in the chat. That is correct. It is an estoppel certificate. Good job, guys. All right, we've got about 10 minutes left. I'm gonna knock through a couple of these questions here. We won't get through this whole section, but I do want to hit it for you. License, law, and rules of the Ohio Real Estate Commission. Question number 1, a broker receives a client's earnest money check and deposits it into his trust account. Prior to closing, however, the broker needs money to pay monthly overhead expenses. He borrows some money from the trust account, fully intending to replace it before closing. The broker is guilty of A, misrepresentation, B, commingling, C, conversion, or D, condemnation. All right, I'm going to give a hint here. You won't get these on the exam, but I want you guys to think. It's important that you answer quickly, but not too quickly. If you answered B, you're wrong. So try again. Is it A, misrepresentation, C, conversion, or D, condemnation? All right, seeing some conversion to C, and that's correct. So misrepresentation is the unwitting act of giving false representation, right? So if you said, hey, is the basement dry? And the agent says yes, but they don't actually know, they're misrepresenting. Commingling is when you take the right money and put it in the wrong account. So if I took the earnest money check and put it in the operating account, that's commingling my funds. Conversion is where I have the funds in the right account, but I'm using them for the wrong thing, right? And that's clearly what happened here. Question number 2, an agent who specializes in the sales of commercial properties. What should they do? Should they A, find a broker that specializes in the sales of commercial properties, B, stay with the same brokerage, C, have done at least 20 residential transactions to sell commercial property, or D, seek additional education in order to be licensed to sell commercial real estate? The B's show up quick. Stay with the same brokerage. Ohio license law says that your real estate license is good for both commercial and residential. There's no distinction. Now, it is important that you understand that brokerages do have distinctions around that. And Keller Williams Greater Metropolitan is a brokerage that has some distinctions around that. So if you're interested in selling commercial property, you have the opportunity to sell commercial property. You're going to want to do that alongside one of our commercial agents. Or what I always recommend is just refer to a commercial agent and collect your referral fee. Question number 3, how many hours of continuing education are required by Ohio license law over a 3-year period? Is it A, 30 hours, B, 26 hours, C, 20 hours, or D, 35 hours? It is A, 30 hours. Question number 4, a broker receives an earnest money payment. The broker deposits the earnest money into his trust account. By law, what is the amount of interest a broker may bear on his trust account? A, the minimum required by state usury laws. B, 10%, C, 0%, or D, 4%. Correct answer is C, 0%. It must be in a non-interest bearing account. Question number 5, who approves the appointment of an ancillary trustee when a broker has died? A, the Department of Commerce, B, the probate court, C, the division, as in the Division of Real Estate, or D, the commission, as in the Ohio Commission of Real Estate. Yes, look at you guys. You're going to pass this test. Probate court. Anytime you see that someone has died, your first thought should be that probate court is going to be involved. Question number 6, a buyer makes an offer to purchase a house and gives the seller until midnight, 3-day hence to accept the offer. Prior to acceptance, the buyer withdraws. What is true? A, there is a contract since the buyer made an offer. B, the buyer is allowed to withdraw the offer anytime prior to acceptance. C, the buyer may not withdraw the offer. Or D, the buyer must wait until the end of the 3 days to withdraw the offer. Yeah, B's right. Anytime they want, they can withdraw the offer until it is accepted, at which time they need to hang on, or they're now under contract. For a minimum of how many years must a broker keep records? A, 5 years, B, 3 years, C, 1 year, or D, 2 years. Yeah, it's B, 3 years. 3 years to the day. Question number 8. under the Ohio Real Estate Commission Recovery Fund, the commission shall impose a special fee not to exceed $10 on each license filing a notice of renewal if the recovery fund is less than A, 500,000, B, 3 million, C, the commission may impose the $10 fee anytime, or D, 2 million. You guys are on it. It is A, 500,000. So you're probably going to have a question about this. It's important you know. If the amount available is less than 500,000 on the first day of July in the preceding filing, they can charge up to, not to exceed, $10 per year. They can impose fees not to exceed $5 per year if the fund is greater than $1 million but less than $2 million. And they shall not impose any assessment if that amount is over $2 million at time of filing. Question number 9, a person making an application to the recovery fund for payment must file an application to recover within A, no statute of limitations on a claim, B, 60 days, C, 90 days, or D, 1 year after the termination of all court proceedings. It is going to be D. 1 year. They have up to 1 year after the termination of all court proceedings to apply to the recovery fund. And our last question for tonight, question number 10. If the superintendent pays any amount from the recovery fund in settlement of a claim toward the satisfaction of a judgment against a licensed broker or salesperson, then A, the license of the broker or salesperson is automatically suspended. B, the salesperson or broker must pay a fine of $2,500. C, the license of the broker or salesperson is automatically revoked. Or D, there is no action against the broker or salesperson. The fund is set up to protect the public. Yes, you are right. It is A. If somebody claims the recovery fund funds against you in settlement, then you are suspended until which time you have paid those back plus interest, All right, so we're coming up on time here. I'm gonna go ahead and we're gonna call that a day for today. We are back here next Tuesday at 6 p.m. every Tuesday, same spot. If you guys have anything, any questions in the meantime, I know a couple of you have reached out to me. Feel free to do that. Make sure that you schedule your tests as soon as possible. If you need a retake scheduled, reach out. Once you schedule your exam, please let us know so we can wish you luck. We're all in this together. I want to get you guys through this so that you can get on to the fun stuff, which is helping people buy, sell, and invest in real estate. So if you haven't scheduled your exam, get it scheduled. If you do have it scheduled, let us know when that is. If you attempted and failed, make sure we have a retake in the works for you. And if you haven't applied yet, let's get that done right away. All right. Talk to you guys soon. Have a wonderful evening, and we'll see you back here next week.